were manual. Like you'd meet someone at the branch, they would come in, you'd fill out a form, you go through a process with them. And so we had manual processes that are automated or enabled by software, was the evolution. So the analogy could be you had this cow path, and then you decided to pave the cow path. Well, maybe where the cow path ran wasn't the best place to build the interstate. And maybe where the cow path isn't the best way to enable the connection of these two things. So the shift that we're seeing being enabled by AI is that you can now create software-centric systems. So you're leveraging the best of the technology today that are enabled by AI. So it's agentic, AI-enabled workflows.
All right. Well, we're here today with Edward Katzin. And Edward, if you don't mind, would you maybe tell us a little bit about yourself?
My background started as an engineer, working in low-level telecommunications, but that very quickly got me into the world of payments, as well as a few other industries, but focusing on the topic at hand being payments and fintech. I've had the opportunity to work at Visa with a couple careers. First career at Visa, I was there in the CTO office, working in the bowels and the technology at Visa. And then the second career, I got to come in helping to lead emerging payments, driving innovation at Visa, working on various initiatives, including what's become Visa Checkout, a variety of the tokenization and other innovations at Visa. And then from there, had the opportunity to work with a pretty incredible company called Apple and helped to work on elements of the Apple Pay release and Apple Pay launch. But my focus was on retail payments. So it was really on improving the in-store and online payment experience as well as Apple Pay. And then along the way, I've done other miscellaneous jobs and startups.
So you haven't done that much.
I prefer to relax and just take life as it comes.
Yeah, it's quite impressive.
Yeah.
Quite impressive. So how did you meet Cosmos?
I had the benefit of meeting Cosmos quite recently at Money 2020. And for those of you that are in the industry and know, Money 2020 is this pilgrimage for people in fintech to come together and to share and exchange ideas. And what struck me about meeting Cosmos was, one, he's the first person that I met that actually has a payments company named after him, Cosmos Pay, which is actually amazing. I've never gotten my name on the marquee, so I was quite blown away by that. But it's also really seeing a next generation of innovation coming. Combination of meeting you, Cosmos, and then also getting to meet Jay and really seeing how the industry is evolving was eye-opening, because walking the halls of Money 2020, running into a lot of people I've known over the decades, people I've seen, but it was also impressive to see all the new people coming into the industry and all the incredible ideas that they're bringing. So it's exciting to be here with you.
Well, thank you. It was really exciting for me to meet someone that has the experience and the pedigree that you do. Like you said, running or working for Visa, working for Apple, and then your experience with compliance. I mean, talk about someone that's done it all. You've definitely done a lot.
Yeah, plenty more I could do. I aspire to more, but thank you.
So compliance is the most recent.
I was the founder of a company called Compliant with a K, which was
Compliant.
Yeah, which was recently purchased by LegitScript. I departed from that company. I guess going on almost 2 years now, and since then really got refocused on how we could leverage artificial intelligence. I first got exposed to AI when it was back propagating and forward propagating neural networks, and I'll date myself in the 90s. There's a system there called Visa Advanced Authorization, which is a very sophisticated neural network that does real-time fraud detection, and I had the benefit of working on that in my first career at Visa as well. And so really seeing how that technology has evolved and the different applications of it within financial operations, especially in regulated industries, is something that I got very curious about. And looking at it not just from the angle of financial services, but it could be any regulated industry, whether it's healthcare or insurance or oil and gas or transportation. But at the end of the day, especially in a capitalist economy, a company doesn't exist unless it's moving money, unless it's making money. Every company has to deal with financial operations, and that got me very curious about how we can leverage this new generative AI on top of the models that we'd known that are more deterministic or have different forms of implementing AI, and how we could bring that into the market and really use it to elevate and drive innovation in the industry.
Very good. Now, would you say, going back to the 90s, but even today, that's 30 years ago.
Thank you for reminding me how old I am.
Yeah, well, hey, I'm older. I'm older than you are. So, where would you put that on the spectrum of it being maturing? Is it still in the early stages? I mean, because what we see as the public is some impressive things, but very impressive things. But it's not just everything's automatic, everybody's in payments. There's still a lot of people that are on the outside looking in. We talk about the ISV market all the time. How do you see that impacting what's going on with ISVs, more getting into payments? Everybody's going to be touching payments, it seems.
A great way to put things into context is to look back. And so, thank you for pointing out my time in the industry. It's been interesting to see this evolve. So, I was literally on the front lines with the birth of mobile technology and had the benefit of literally helping to roll out first generation of mobile. And the impact of that was phenomenal. For those of you that are old enough to remember in the industry, the old knuckle buster, and someone literally picked up a phone, called in an authorization, and that's the way it was handled. Then very quickly coming out of that, that was in the late 70s, early 80s. Coming into the 90s, we started seeing the electronification of payments, and Transmodus was part of that, and Transmodus really helped to drive and enable that. And electronic processing was a significant part of the adoption of Visa and MasterCard, and we saw how that changed the industry through the 90s and going into the 2000s. The thing right behind it is, in parallel, internet technologies were there. The protocols, HTTP, all the other, the web browser, all the things that are enabling e-commerce today that we take for granted were just coming online in the early 2000s. And you could argue it didn't take until about 2010, 2015. So the adoption curve between the technology coming online and being available and being fully adopted throughout the industry is, you go back and analyze it literally, but off the top of my head, it takes about 7 to 15 years for it to get fully drawn in. So if we look at AI specifically, forms of machine learning, deep learning, back propagating, forward propagating neural networks, we've been using that in the industry since the 90s. It's been around, whether it's for fraud detection, optimization, all kinds of other ways of implementing it. But for many, the GPT moment was, I can't remember the exact time, it was October, November 2022. When they first, through a web browser, had an experience with ChatGPT. That those models were actually around in 2018. And if you had access to the technology and who to work with, it was all coming online. But the public didn't really become aware of it until about 2022. And what we're seeing now is with the rise of protocols, whether it's MCP or A2A or Agent Commerce Protocol, ACP, we're now getting past the hurdle where we don't only have the artificial intelligence capabilities, whether it's generative or other models, but we also have the data and we have the interoperability. And payments is all about enabling an ecosystem. So I can have the best technology as a company, but if I can't interoperate and bring that into the gateway, into the reseller channel, into the merchant, into the bank, I could go on and on. There, Visa calls it a 4-party model. Well, maybe there's more than 4 parties involved in the payments experience. Some would argue it's like 12 to 20 parties. Yeah. When you look at everyone else, and we include the regulators, the auditors, everyone else in it. That interoperability is essential. For an ISV, you could look at it from the perspective of many are using it now to optimize their own business. So they're leveraging the GPT models, in their own workflows. Some are starting to use it for interoperability. So if you look at what Stripe is doing with Agent Commerce Protocol and how they're building a community around that, that's already driving active adoption and change. Anthropic releasing Model Context Protocol has now created significant adoption, and that's becoming a standard in the industry. Google releasing agent-to-agent protocol is creating standardization in the industry. I think you're going to see over the next 6 to 24 months is the industry coming together around those protocols and then establishing them as standard ways of practice.
Well, I know Cosmos has a few questions for you as well.
I've been burning to ask you a few questions.
No way.
There's a lot of change going on in the industry right now, but no one's getting affected more by change than banks, I feel like. With the introduction of VAMP, with the rise of stablecoin, or streamline the compliance and regulations and auditors within utilizing AI in order to streamline that process.
Bigger banks are already all over this. So if you look at the JP Morgan, B of A, Wells, they're already investing significantly in this technology. They already have partnerships with the major providers of the frontier models, whether they're working with OpenAI, Google, Microsoft, depending on their shop, their technology, their relationships. I won't reveal anything behind the scenes for obvious reasons, but they're heavily invested and they're already in this. If you look at banks that are mid-tier or smaller banks, they're much more challenged because they don't have the same resources, they don't have the same budgets, and they don't They're just not able to capture this. So any bank right now is facing what I would consider to be one of the most significant shifts we've seen in the industry since what you might call the internet revolution, digital transformation, really redefining customer engagement and touch points beyond the branch and beyond physical. Getting that to mobile was a huge shift. And now with the rise of, and since you introduced it, I'll go on this tangent, with the rise of DeFi, so decentralized finance, which introduces not only crypto, but then also stablecoin settlement, from 2018 until, I guess, recently, the last 6 months, there was a lot of uncertainty. And, in the past, different administrations have had different opinions about it. Some have been more pro, crypto and stable, some haven't. So with the rise of with the passing of the Genius Act, now it's become very clear what the laws, regulations, and guidelines are for stablecoin issuance and for transacting in stablecoins. So that's created stability in the market, which is now driving this incredible wave of stablecoin adoption. You just look at what Circle and Tether have done and enabled, PayPal, PYUSD, and we can also look at what Stripe is doing with Bridge. That is driving significant adoption and momentum in the direction. If I'm a bank, and having spoken with several banks as recently as a few days ago, a challenge that they have is the deposits are leaving the bank. And for a bank, obviously they're driving income from interest income. They're driving non-interest income as well from the other value-added services they're providing. But if they lose that deposit base and if they lose that customer relationship, that's a significant threat to the bank's going forward profitability. Virtually every bank I've talked to is looking at either dealing with the adoption of stablecoin, using stablecoin for settlement, stablecoin for transaction, but also looking at how they can leverage other forms of DeFi at the demand of their customers. So they don't want to see the assets going from their accounts to Coinbase and other providers, or I could use my Binance Trust Wallet or wherever it is that I'm moving my assets to. So that's one key aspect of it. The combination of AI and crypto is really interesting because now where you had challenges in the monitoring of the transactions, the enablement of the transactions, you had to know how to manage your keys, you had to know how to manage your wallet. There's always the threat of hacking if you didn't know what you were doing. But now having wallets that aren't self-custody, or like Coinbase or others, where they can provide the security, they can provide the management of it, is creating a significant level of trust. I didn't even mention Ripple, Hedra, Hashgraph. There's so many other options out there that when you look at how banks can get their head around this, they need to be able to scale it, and they need to be able to manage it. And so leveraging not AI in and of itself, but leveraging AI in a way that allows them to augment their human flows and the expertise and the know-how that their compliance people have, and then bringing it not just as overhead for the compliance department, but bringing it all the way through to the bank relationship manager, bringing it into the front office, bringing it through all the different functions. So whether it's finance, customer support, customer success, as they're doing product development and improving the offerings that they have. I could spend days talking to you about the ways that they could leverage AI and do that. And the more innovative banks already are, they're investing in that. And then the ones that have been able to unlock it are actually seeing real world results.
Smart guy.
It's pretty fantastic. Well, he's up to his elbows in this stuff.
Oh yeah, we're living and breathing this every day.
Yeah,
for the last 2 years, I'm CEO and founder of a company named Jember.
Okay.
And Jember has been heads down on how do we leverage the best of AI to enable two sides of compliant growth in the financial services industry. One side of it is call it the hygiene factor. You have to be compliant. The real value is in driving growth. And so if I'm a bank or any kind of financial services organization, and I want to be able to drive growth in a way that leverages what's happening with stablecoin and leverages what's happening with AI, we can enable that. And the way that we enable that is by transforming where once, how do I word it? In the past, for obvious reasons, all processes were very human-centric. We were manual. Like you'd meet someone at the branch, they would come in, you'd fill out a form, you go through a process with them. And so we had manual processes that are automated or enabled by software, was the evolution. So the analogy could be you had this cow path, and then you decided to pave the cow path. Well, maybe where the cow path ran wasn't the best place to build the interstate. And maybe where the cow path isn't the best way to enable the connection of these two things. So the shift that we're seeing being enabled by AI is that you can now create software-centric systems. So you're leveraging the best of the technology today that are enabled by AI. So it's agentic, AI-enabled workflows. And then they support the humans. At no point there's a lot of conversations about, oh my God, AI is replacing jobs and AI is going to, cause all these, different societal and economic impacts, and that's a different
It's a
podcast
long
topic.
conversation.
So intentionally ignoring that, I think what you're seeing is a sale is still closed when you pick up the phone. If you're dealing with a high net worth customer, you're going to close that on the golf course. You're going to close that over a conversation. Having the personal connection and being able to differentiate your services and offering through that very personal relationship is essential. What we want to do is we want to leverage AI to empower the individuals involved in managing that relationship, whether it's the bank relationship manager, customer success, customer support, compliance, finance, everyone that touches that account holder and the services provided to that account holder. We want to empower them to be even better. And so the bank can stand out. The bank or the financial services company can differentiate through that unique high-touch customer service. But the way you scale it and you protect the profit margins and you minimize the risk is by leveraging the best of AI.
Basically taking the talent of a salesperson and optimizing it, taking all the waste out of it, all the time that they're spending doing things that aren't closing the deal. That's what you're talking about.
Exactly. So it's empowering them to really know what is the value that they're offering and bringing, and not having a generic, script or very generic training. It's no, you're talking to that customer and you know that customer. It's being able to see that customer relationship holistically, because many banks are dealing with multiple silos. The systems don't talk to each other. The data isn't shared. There's no way to create this amazing holistic view of the customer. But you also have to honor data security. You also have to honor, different people have different rights and access to the use of the data. The view that a compliance person would see is very different than what a salesperson would see.
Yeah.
And so, for example, if suspicious activity shows up, the compliance people need to deal with it and process it, but the salesperson or the relationship manager isn't authorized to tell them about it because that's legally required. Mm-hmm. So honoring the data security, data sovereignty, data privacy, every step of the way is essential, not just within the organization, but especially across organizations.
Yeah. Well, we're familiar with that at Transmodus because from the beginning we've been kind of a single login for all participants. This goes way back. It has been our architecture the whole time. So we see people that have multiple logins to, provide service. It's, that's a problem based on what you're talking about.
So it has to be role-based. And in a smaller organization, one person may be playing multiple roles, and that makes sense for them to have those rights. But it also has to be auditable. So it has to be done in a way that you can prove to either your internal compliance, your third-party auditors, and especially the regulators, that every interaction, every event is handled in full compliance with all the applicable laws and regulations. And in the case that you're working with a partner like a card network like Visa or MasterCard, that you're honoring and adhering to the op regs. Or if you're working with a processor like Fiserv or Global, that you're honoring the commercial agreements, the requirements. And then since you mentioned it, maybe you are dealing with issues like chargebacks and fraud and refunds, which may drive your VAMP ratio and may put you in a place where you're creating risk to the portfolio.
Yeah. You've got something on your mind there. I can see it.
How far do you think AI can go in helping a bank with their VAMP ratios, with just the compliance overall? So obviously you can tie it into the underwriting, but it's already been tied to gateways for fraud prevention. But what's the next step? What else can a bank use besides just constant monitoring, underwriting, and the fraud prevention during the sale? Do you see any other paths forward on AI of lowering chargebacks, lowering ACH returns, lowering anything that could potentially have an account get closed, which again would then result in less deposits for the bank and less money for everyone?
Oh man, you could have an hour-long conversation about this topic as well. Trying to keep it succinct. The challenge really arises in the balance between driving business, driving volume, enabling transactions, versus ensuring the quality of those transactions, the compliance of the transaction, or as we used to say in the halls of Visa over and over again, we're committed to protecting the integrity of the payments ecosystem. So if you look at why Visa has something like VAMP and why ensuring that, at least in the acquiring space, the delivery of merchant services drives high quality traffic. Well, for one, you're protecting consumers. So if a merchant is driving high chargeback, high refund, maybe there's something wrong there and there's something that should be stopped. You do want to keep the bad actors out. And so the question becomes, how do you identify and keep the bad actors out while making it as efficient and as effective as possible for those that are in integrity to stay in integrity. And if you're a small merchant, you don't have a high transaction volume, 2 or 3 refunds or 2 or 3 chargebacks could start getting you in VAMP trouble very quickly.
Yeah.
Especially if you're doing 20 or 100 transactions a month, you don't have a big denominator to go off of. So you can get into trouble very quickly. And in those cases, it's unfortunate because it's penalizing small businesses that actually may not have an issue. Who knows? Friendly fraud, disgruntled customer, who knows what they're dealing with. So you have that side of it. On the other hand, you have merchants that are doing things that they shouldn't. Like if I'm a nutraceutical that's selling diet pills, don't have proper ingredients, I'm making claims that I shouldn't be, and I'm violating FTC regulations, or I'm doing all kinds of things that are driving customer dissatisfaction. Yeah, I should be turned off, and I probably should end up on a MasterCard match list. And in this case, VAMP is a good thing. You can leverage AI to not only look at the things that are feeding the VAMP ratio, so the chargebacks, the disputes, and those specific elements. You can look at the broader context and be like, well, are the owners doing anything that's shady or illicit? Are they offering products that are in a gray area or that aren't meeting FDA or FTC requirements that they happen to be in nutraceutical? Are they doing other behaviors or activities? AI can be leveraged to provide this much more holistic view. It can help automate that, and it can be incorporated in the forms of monitoring. It can be incorporated in the forms of background checks. It can be incorporated in the forms of leveraging much broader context to inform that decision. The banks that are more sophisticated are already doing this in many ways, and they have been doing it in a manual way, and now they're leveraging AI to do that. Smaller or mid-sized banks that want to get into merchant services, it actually can level the playing field because now through AI, they can actually adopt those practices and scale them in the bank without having a small army of compliance officers and without having to have all that institutional know-how as well.
Do you see a way that you'd be able to utilize AI to differentiate friendly fraud versus actual fraud? So, because essentially with VAMP, it is on the processor or acquirer level of, okay, this merchant has 100 transactions, maybe they had 3 chargebacks, so they're technically at a 3% VAMP, but these are friendly fraud, 3 transactions or 3 VAMPs aren't affecting my ratio that much overall. I'm going to allow this to keep moving forward. Right, but if you see, okay, they had those 3 transactions, they're all real fraud, they're actually fraudulent transactions, and they just started processing, maybe that does change your view on it, and you want to close that account before, more fraudulent transactions do occur.
It takes data, so you have to have enough data to be able to see the patterns, drive the pattern recognition, the analytics to do that. Classic examples are, the kid who burns $1,000 of mom's credit card on Roblox, or the family member that wasn't authorized and now burned a few $1,000s on iTunes or Apple Store purchases. Fraud, not fraud, friendly fraud. You're in this interesting gray area.
Yeah.
It shows up as a chargeback. It impacts the merchant, but it's not organized crime fraud. It's not someone doing identity theft and running it through. When you're looking at true, quote unquote, true fraud, you're looking for the patterns. You're looking for organized crime. You're looking for theft of data, or illicit or unauthorized use of the card credentials. And those patterns are there. It's just a question of, is the bank leveraging either internal or third-party systems that are allowing them to see that? And then are they doing that in real time, in the context of the transaction monitoring? And then do they have ways to proactively manage it? So it's not that you got a notice from Visa that you exceeded a threshold. It's that you see it as it's happening, and you can actually proactively manage it and either stop it before it exceeds the threshold, or if it is getting to and exceeding the threshold, you can proactively terminate the merchant.
One thing you mentioned was that, we heard years ago that, and this is from bankers, that if you're not in payments, you're not going to be around. Do you agree with that? If you're a bank and you're not in the payments business.
Yeah, so you were,
You know what I'm saying?
we're making, age jokes. You'll probably end up editing this out. But all that aside, I think we're both old enough to remember when it was just called banking.
Well, yes.
It wasn't even called payments.
That's true.
And so you were just in the banking industry, period.
Yeah.
And banks happen to process payments as well. And if I needed dollar bills or quarters for the cash register, I would go to the bank.
I was looking at it a little, I should be more specific.
Okay.
So I'm talking about the bank actually being the acquirer out there, being the ISO, so they had this whole network of people that went out and brought business their way.
Elavon? Chase Merchant Services?
Exactly. Well, again, those were the really well organized ones, and then everybody popped up. How do you see that going forward? Because, I mean, we deal here at PayCosmos, we support a lot of resellers, a lot of people that, how do you see that going forward? Are we going to be, putting them into the AI position you were talking about for these salespeople, companies like us doing that?
Maybe the pressure banks are dealing with is they have to drive non-interest income. And especially as interest rates have gone higher, we're not in zero interest rate environment anymore. They need to look at ways to increase the value that they provide their community. And one way to provide value for your community, especially if you have a direct relationship with the business, you're helping them with a commercial loan, you're holding their deposits, well, why wouldn't you offer them merchant services? And whether it's physical terminals or virtual terminals or the variety of other payment services you can provide, B2B, AP, AR, the whole spectrum of it, it's in the bank's interest, especially with the rise of DeFi and crypto, drawing deposits and customer attention away, to really provide that holistic, full spectrum of services for their account holder, especially their commercial and business account holders, which includes their full payment management. Having visibility into their payments and that flow gives you real-time visibility into the cash flow. If you're seeing the real-time visibility into the cash flow, you can then provide short-term trade finance. If you know the business is going to do an expansion, now you can provide them with commercial loans. You're now expanding. It's not only about payments, it's about having the touch point and having the data to expand the relationship. And then the well-managed, profitable banks know that they can turn this into very high margin, value-added revenue for them. And it's durable revenue because you're creating a lifetime relationship with a customer that as they expand, as they grow, as they evolve, they're going to keep banking with you. The bigger banks, the ones that we mentioned, obviously have their own merchant services division and have this in market and are already growing and evolving that. Small mid-tier banks that may not have a merchant services component, they can really look at partnering with PayCosmos or leveraging the third-party technology so they can bring that in. But that technology has to be built compliance first. And that technology has to honor all the applicable laws and regs, whether it's Bank Secrecy Act, Anti-Money Laundering Act, Patriot Act, and go through the alphabet soup of regulations. So as long as they can expand into that market without creating undue compliance risk to their license charter, regulatory position, why wouldn't they go into that space?
Right. Now it's easier than ever for them in many ways.
You and I may hold that opinion. It would be interesting to get a bank compliance officer on here and see if they would say it's easier than ever. Because they may argue that the compliance threats in the risk environment has just got even broader and scarier for them.
Well, now it's AI trying to find AI. As you get the fraudulent accounts coming in, and it's AI's generating these false documents, false driver's license, and it's you having to use AI tools in order to catch that. So we had to implement verification tools to verify that this driver's license is real, that these documents are all real. Otherwise, you're just going to get, knocked on the side of the head with a case of, fraudulent merchant accounts. But I'd love to hear your opinion on, for banks that aren't in payment processing yet or merchant services, feasible for them to go the acquirer route, utilizing AI in order to help with the compliance and regulations, or does it make more sense for them to do a quote-unquote retail ISO approach where they utilize an existing processor, potentially with a white label, not take on the risk and liability of the accounts, just submit leads, submit referrals, and get a commission percentage rather than building up their whole program themselves?
A couple ways to answer that. I'm not a believer in one-size-fits-all solution. Pick your number, just throwing a rough number off the top of my head. For the sake of discussion, assume there are about 5,000 banks in the U.S. You could assert that no two banks are even going to do it the same way. So every bank, in that universe thinks that they're unique and that they're doing it their own way, and the way they service their customers and the way they differentiate is absolutely unique, and that they're special because of that. It's one way to look at it. On the other hand, banks have a lot of similarities. They're all under either an OCC or FDIC regulatory regimen, federal or state banks. They're dealing with very similar laws. If you're in the U.S., jurisdictional laws are going to be the same state laws, requirements. So given that, the bank really needs to optimize, one, for their account holder base. And again, there is no one solution fits all, but in general, based on the conversations I've been having throughout the industry, what many of the banks are doing is they're looking at how can we grow and better support our existing account holders. So where they're starting with is who is there, right? So if you're dealing with companies that are, making this up, but in the mining sector, or you're doing large B2B transactions, what they're optimizing for is these supplier payments, AP/AR workflows. If you're dealing, if you're a bank in a community where you have a lot of restaurants, they're trying to solve for how can we deliver merchant services and tap into that merchant services flow, get into some of the revenue that's being generated from them having a terminal, them processing the payments, capturing the interchange, offering them short-term lending, everything else that they can. Some banks are actually better optimized for e-commerce, and they're optimized to support individuals or businesses that are selling, maybe not only in the U.S. but internationally. And now they want to be able to expand their e-commerce acceptance and settlement. The default that's happening is a lot of merchants get frustrated. So the easiest solution is Stripe Connect. So why don't I just use Stripe Connect and go? Well, it's great. Like, as a software developer, someone who's had to implement, hosted payment page and turn that on, Stripe is a great solution. It's really simple and really straightforward. That the pricing is the pricing, and you're going to pay whatever 2.9, 3% is what you're going to pay. If you're an ISV and a reseller, there's not a lot of reseller economics there for you to tap into. And if you're a bank, well, you're not tapping into that flow at all. Like, the deposits aren't going through you, and you're not able to provide value-added services of differentiation. You're not able to provide your account holder with better cash flow management, better treasury management, and all the other things that you could do. The bank really takes the time to understand who their current account holder base is and their customer base, and also takes the time to really understand where they want to grow and where they see this expansion opportunity. The differentiation is in tailoring the relationship management, the offering, and the banking services for them. So it's probably in the bank's interest to use a third party for all the things that are commodities. So does a bank need to build its own gateway? Probably not. Does a bank need to build its own reseller channel? Probably not. Does a bank really need to manage all the elements that take you from initial point of contact through due diligence, through service activation, through ongoing transaction monitoring? You and I both know there are a lot of third-party solutions that could solve that very elegantly. So in that case, it's probably in a bank that doesn't have that capacity in-house, the IT capacity, the operational capacity, they can't really build it in-house. And if they haven't built it, they probably don't have the resources to build it. Then they should really be looking at how can they leverage that ecosystem. So now more than ever, banks that haven't invested in that and that haven't built it out can now leverage these providers that are leveraging the technologies and that are doing it in a compliant way to step into these markets and compete in a whole new different way, not only to retain and better service their existing account holders, but now to unlock a whole new base of customers.
I completely agree. I think it's the next step for both banks and ISVs. There's no reason to not. If you can tie in with a white label solution, there's no need for you to build out your own program if that's not what you're already an expert in. Because it's going to take you a year and how many millions in order to become an acquirer, to become your own payment gateway or just overall provider in general. I do want to get schooled on one thing, because I have an opinion. I feel like you have a very differing opinion than me on crypto.
Let's find out.
So I've said, whenever somebody asks me about crypto in payments and in people investing in crypto and not trusting their money in banks, they think that the value of the dollar is not going up. Well, that's a different conversation. But payment side of crypto, I've always said I don't think it's going to ever take off to the point where it's replacing a credit card ACH check, because I don't feel like it's solving any problems in payments. As far as, is it the most secure way to take a payment? I would say taking a wire is the most secure way to take a payment. Is it the most affordable way to take a payment? I'd say taking a check or an ACH is the most affordable way. Is it the most convenient way to take a payment? I'd say credit card is probably the most convenient way to take a payment. So in a payment side, where does crypto fit in? And what's the, I can see you smiling. I know that you have a different opinion. So where is it going to go from here?
I don't know that I'm qualified to answer this question, and the reason why is, I'm the guy who was mining, Bitcoin on a laptop, whatever it was, 2009, 2010, when it was at 5 cents, and you could mine it on a laptop. And my read of the Satoshi paper was that Bitcoin was for payments, and I had no faith in the technology at all, and the fact that it was more than 10 minutes to get the consensus, when Visa could off-clear settle, in a second and a half or less. I was like, who's going to stand at a counter and wait 10 minutes for an auth return? Like, it's not going to happen. And so I didn't see it working for payments. So I sold all my Bitcoin at $5, which friends and family have raked me through the coals for the insanity of that decision, hindsight being what it is. I didn't have any faith in crypto or Bitcoin for payments at all, as far back as whatever, 2010, 2011. All that aside, I never saw the HODL path, so the digital gold, which is what's driven the value and the appreciation of Bitcoin. And that's a whole separate conversation. So clearly I had no faith in crypto for payments. So in that sense, I think we agree. I think what's changed now with stablecoin and the introduction of stablecoin, and if you look at how Ripple and others are approaching the market, it's how do we improve the settlement infrastructure for payments, and how do we improve availability of liquidity for either banks or merchants, and how do you pull forward that cash flow to create greater liquidity in the system, which can increase transaction volume, which can then facilitate commerce. And so in that sense, if you just want to get down to brass tacks, what's the cheapest way to send money? Zelle. How much do I pay for a Zelle right now? What's my fee on a Zelle, right? It's nothing. So if I'm a business and I want to accept money as cheaply as possible, I'm going to use Zelle. If you look at the security elements of it, within ACH and within Fed, you have dispute resolution mechanisms. Like if I send Bitcoin or ETH to the wrong address, sender beware. And same with the recipient. If I give someone the wrong wallet address, oh well.
Right.
It went where it went, and there is no dispute resolution, and there is no recourse, and there is no way to reverse that transaction. So in that sense, it's not very consumer friendly because it doesn't give consumer protection in that regard. Where I think the game has changed is when you look at the ability to issue your own stablecoin. And if you're an entity that's big enough, and we could debate that threshold, is it I'm moving $1 million a year in cash? Is it I'm moving $10 million a year in cash? Whatever the threshold is, at some point, it actually becomes economically efficient for me to issue my own stablecoin and to settle transactions on my own book or my own ledger using my own currency. The customer doesn't have to see it, right? So an entity like an Amazon or a Walmart can create their own coin, and especially given that they're international and they're doing a lot of FX, they can actually create a great deal of efficiency within their own ecosystem by settling in stables, especially if it's their own issued stable and they're fully controlling the issuance and the capitalization of that stable. So they don't have to worry about it coming depegged, like we saw happen with Binance and some other coins in the past. I think Tether became depegged a couple times too. So when you look at that, where I think we see it evolving is two different sides of it. So you're 100% right. The convenience of the credit card, Visa invested a little bit of money in marketing. Visa invested a little bit of money in consumer education, and the plastic, in my pocket became ubiquitous. With Apple Pay and the release of Apple Pay, it shifted from being top of wallet to being front of phone. So what I want to be is I want to be that default card in your Apple Pay, Samsung Pay, Google Pay wallet if I'm a bank. The convenience of having Apple Pay on the watch is absurd.
Right.
Like I can literally go running, I don't even need my phone, and I can still pay for my coffee or whatever I want to buy just with the watch. So that convenience factor is hard to beat. You are seeing players like, Square and others are bringing the convenience of Bitcoin and crypto transactions into the Cash App or into other mobile apps. So that's an app on my phone and on my wallet. So I'm starting to have that convenience. And so I think we're going to see more and more transaction volume moving in that direction. It's the classic challenge where it looks flat, 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 right up until the hockey stick goes. And when the hockey stick goes, the exponential curve goes, and then there's no coming back. And so I think we're still in that flat part, but it's just starting to inch up, and we're starting to go. So where's that data? Pick the universe of banks you want to use. But say you're looking at small mid-tier banks in the U.S., they probably have around, off the top of my head, you can look up the number and confirm it, but it's about $9 trillion in assets, deposits under management. Look at that number in crypto deposits or total value locked, and it's going to be somewhere in the neighborhood, I don't know the exact number off the top of my head, but it's going to be somewhere between 120, 160 billion is where it's going to be. So it's a rounding error to crypto right now. So it's super flat. But if you look at the growth year over year in DeFi and crypto, it's exponential. When does that inflection point hit? Is it hitting 18 months, 36 months, 5 years? Where is it? Many would argue it's not when is it going to hit. It's not is the tidal wave coming. It's when's the tidal wave going to wash up on shore.
Who's adapting it today?
So you're seeing plenty of Bitcoin transactions in Cash App. You're seeing PayPal, others support it. You saw Stripe heavily invest in Bridge. You're seeing all the Amazon, Walmart, they're all exploring using their own stables. So with the Genius Act coming out, with having greater regulatory clarity coming out, You're seeing a lot more investigation, a lot more experimentation, and a lot more adoption happening, I think, in the last 6 months than we'd seen in the prior 6 years.
Do you think that that's going to be feasible on a business to consumer or consumer to business side for transactions, or do you think it's going to be mainly a business to business source of payment?
So I think what you'll see stablecoin settlements really taking off is within B2B. And it's companies that have especially international payments and have multiple subsidiaries. It makes sense for them to do that for intercompany transactions. Companies that have significant supplier networks and can drive that kind of leverage with their supplier networks and kind of force that on their payables and receivables, I think you'll see that as well. On the consumer side, we are seeing adoption of Bitcoin. People are paying Bitcoin, passing Bitcoin through Cash App and other interfaces more and more, but it's still nascent compared to the actual volume.
Right.
But year-over-year growth is double or triple digit. That's where you're seeing, okay, like how many exponentials do you need before it suddenly becomes impactful?
I got to buy some Bitcoin.
Buyer beware.
That's quite pricey at this point.
Compared to what? Some people tell you it's
Compared to
going
what
a
you
million.
got in at.
and got out at. Yeah.
Yeah. I remember sitting with someone who said, oh, yeah, I just bought a bunch of Bitcoin, and I think they paid, 80 cents for it. So it never really it made sense, but at the same point in time, it always seemed like the way I always felt it was being positioned was as an investment, not as a transaction, a tool. More evident.
We had two whole different introductions to it.
Yeah.
And I'll admit, it was my own dumb fault because it was the way I looked at it. It wasn't anyone telling me it was that. It was my interpretation of it. So I'm very aware it was my own failure of imagination to see the investment and hodl path for Bitcoin.
What are some common compliance blind spots that you've seen for new either banks getting into acquiring or startup ISOs, MSPs, really anyone in the fintech space that you've seen?
This word blind spot, it's an interesting word. So what is a blind spot? It's that which I cannot see for myself, but it's quite obvious to others. I can't see my own blind spots. I'm quite literally blind to them. I suffer from this too. I'm not claiming to have clairvoyance or full, clear vision of everything. Lord knows my blind spot was not getting the Bitcoin opportunity. So I'll admit my failures and my blind spots right off the bat. All that being put aside, every bank, every organization, every person has their blind spots. And the best way to counter a blind spot is to work with someone, if you're an individual, a coach, in whatever capacity, executive coach, life coach, therapist, whatever it might be, a trusted advisor, someone that can hold up a mirror and someone that can help you see and deal with your blind spots. So it begs the question, how can a bank, how can an ISV, reseller, anyone who's in merchant services, better identify their blind spots? Well, number one, it's get in communication and be in the industry and really see what's happening and what's going on. I'll admit, walking the halls of Money 2020 and just being out there and being in communication, I became aware of a lot of ways that problems are being solved and what people care about, what they're dealing with, that I just wasn't aware of. So it was enlightening, and it broadened my understanding and perspective. I think some of the blind spots are a fear of AI, and I'm not using this as a blanket statement because I get different organizations have different levels of comfort, different individuals have different levels of comfort. There are exceptions to all generalizations, including this one. I would say that I've had conversations with plenty of banks, plenty of compliance officers where they're literally afraid of AI, and that fear creates a blind spot. And because they're afraid of it, they're not willing to investigate it, they're not willing to adopt it, and they'll literally do everything they can to keep the barbarians at the gate. We're not going to let this awful technology in that's going to cause risk, lose jobs, have whatever other impacts they're afraid of. So that's one big one right now is the fear of AI, I think, is causing a big blind spot. I think the second blind spot is I've seen banks bring in and leverage AI, and they pave the cow path. So they take something that was a very established human-centric workflow, and they just sprinkle some AI on it. They try to add AI to it. And great, like you actually might get 20, 30% performance improvement, whatever you get out of it. Resolving the blind spot is if you really took the time to go back and redesign those processes and workflows as software-centric workflows that are augmented by AI and then reinforce the human. The human is now better able to do their job. So a key goal that we see with the adoption of AI, especially on the sales and revenue growth side of financial services, is how do you make the sales team, the relationship management team, the customer service team just 1% better at their job every day. And I'm sure this quote is misattributed to Einstein, but the greatest power in the universe is compounding interest. If you play that forward, maybe the greatest productivity power is just getting 1% better each day. Leveraging generative AI is incredibly powerful because you can do so much with the transformer models and the tools, and you can do that in so many different capacities. More importantly, or just as importantly, it's having the data, leveraging the data, and seeing what the impacts and the benefits are, and just being brutally honest about that. So really measuring it. It's the old adage, if you can't measure it, you can't manage it. And what we're building and what we're implementing and how we bring it to market, everything is tracked in immutable logs. So all the inputs, all the outputs, all the processes, their software, traditional event-driven software, or agentic workflows or generative models, even the human decisions and all the human events are logged and tracked. It's needed for a couple of things. One, you want to have that data to really understand what happened and what's working and what's not working. Second, for audit and regulatory purposes, you want that data because now you can do proactive, real-time compliance monitoring and reporting, and that's essential. But third, that data now becomes the fuel for continuous learning and continuous improvement. So now you can go back and keep making those models, those processes, those workflows, those human interactions better. AI gives us a tool to work with volumes of data in ways that we never have before. Where in the past, it would be overwhelming and it would take a small army of data scientists to do what I'm talking about. Today, with the properly designed and implemented data repositories and workflows, you can get to the same place. A blind spot would be not embracing that and not looking at that initially holistically across your organization, but then specifically identifying the areas of potential, greatest potential return, greatest potential benefit, or where you're seeing real bottlenecks, real challenges that can be resolved in a way that's very economical and drives profitability and margin.
You said something interesting there. You don't know, and you need to be educated in the space. And you mentioned Money 2020 and how when you're walking around, you're seeing what everybody else is doing, and essentially you learn yourself just from walking around. What's the best way to stay in the know with all the changes in the space, besides just going to all the trade shows?
The teams that I'm working with, and this is ongoing. Our friends at MIT and Harvard are offering great free training. So if you haven't jumped online and you haven't taken advantage of the free AI courses and you haven't gotten hands-on, and you're not at least playing with it and using it, well, that's a blind spot. Because trust me, a lot of people are, and it's permeating the industry. So if you haven't gotten hands-on with generative AI, do. From there, you can really leverage it in so many different capacities. So one is listen to good podcasts. Watch the YouTube channels. I'm constantly monitoring the news coming out of all the providers of the frontier models. What are OpenAI doing? What are Anthropic doing? What is Microsoft doing? What is Google doing? Mistral, our friends in China, what they're doing with DeepSeek, Quen, and all the different models. Every day, it's to the point now where I've had to create an AI agent that will go out and harvest the news and distill it for me, because there was a time, 30 years ago, 20 years ago, when maybe I could keep up with most of the things that were going on in the industry, and I could read it and I could stay on top of it. I've given up that game. It's moving so fast. As much as I would love to, I don't have time to read all the time or watch YouTube videos all the time or listen to podcasts all the time. There's not enough hours in the day. So the amount of content being created, the amount of innovation being driven, is at a scale and volume that exceeds the capacity of any single human being. It really is about getting focused on what it is that you're passionate about, getting focused on what it is that you can do to deliver value, aligning that with the organizations and the companies that you work with, aligning that with the customers that you serve. And frankly, it's being in conversations. It's being in conversations like this. Get out of your office. Like, the best way to learn is to get out there, be with your customers, be with others in the industry that are innovating, and really identify what it is that you aspire to, and look at the people that are doing it, and get in conversations with them. And that's how I learn. That's what I do.
Get out of your office. Learn AI.
That's it. Don't hang out in the office.
Mm-hmm. Get a job. Well, Richard, do you have anything else to add? Or?
Well, I've been listening very intently, and this is so feature-packed, so robust, and I mean, there's a lot of great information that you put out. So, this is, I think, going to be helpful to a lot of people to try and, bridge that gap. I keep hearing the term agentic or the agent, right? So one question I had is, can you do it all with one agent or agents depending on some type of topical, or is it just an agent you're done. You get one agent and I mean, it's capable of doing everything you need it to do. Or do you have to have multiple agents?
In the teams that I work with and the work that I've done, I haven't discovered the one agent to rule them all concept. In the technology that we've implemented in the way that we're leveraging AI-enabled workflows or agentic workflows, we build the agents to be very specialized.
Okay.
So you have an agent that's focused on initial due diligence. You can have an agent that's focused on sales enablement and support. You can have an agent that's focused on opportunity scoring. You can have an agent that's focused on identifying cross-sell, upsell opportunities. What we've discovered is same way you would write a job description or same way you would create an accountability for a human being, no one human being can do everything.
Right. So you got a team of them.
You want to play to people's strengths. You want to play to people's superpowers, and you want to amplify their superpowers, and then you want to make sure that if they have weaknesses, and we all have weaknesses, that the weaknesses aren't going to negatively impact the completion of the work or the workflow that you're automating. So with that, our experience has been creating specialized agents is key. But then it's important that those agents have orchestration. That orchestration has to enable those agents to work in concert and support each other and hand off data. And the integrity of the data handoffs and the integrity of that workflow design, workflow monitoring, workflow execution is essential. There are many horror stories in the industry already of agents gone awry. And especially as we're starting to expose agents to Agent Commerce Protocol, we're now empowering agents to actually act as independent economic actors, so they can now send money, receive money. The damage they can cause becomes even more impactful. So it's not just that they're messing up data, or they can mess up a relationship, or they may not complete something as expected. They may now transfer money to someone they weren't supposed to, or they may transfer an amount that they weren't supposed to. So having the guardrails, having the monitoring, and making sure that agentic workflow, those AI agents, are only operating within the scope that they're authorized to is essential.
Yeah. So it's almost like a real-time management aspect of performance across the whole team. We'll call it a team.
Across each of the agents. And some people have been using that analogy as you're creating a virtual team of agents, and your agent is your virtual worker, and that's an analogy that I've heard often.
Okay. Well, that's kind of what I was thinking as far as the agentic aspect.
And Jember helps manage those agents for the companies that you work with?
Yeah, so at Jember, what we've brought to market, what we've created is what we call agent choreography. And in the agent choreography, we have discrete agents that help drive compliant revenue growth, that enable compliant financial operations workflows. The way we orchestrate those agents is by leveraging our proprietary agent choreography. That enables us to use the best of the frontier models. So we're not competing with the frontier models. We can use the best of their technology. But what we can focus on is our expertise in very specific aspects of those workflows, whether it's improving engagement with existing customers, identifying upsell, cross-sell opportunities, whatever aspect of it may be, and then the downstream financial operations workflows, making sure those are done in complete compliance with the regulatory environment, that they're done in integrity, and that all those events are properly audited, logged, and reported.
That's complicated stuff.
But we make it simple.
Yeah. Well, I'm sure we talked about that no matter what you do, you have to make it so that what the user is getting is straightforward, intuitive, everything else. But behind the scenes, it certainly is super complicated.
Steve Jobs said, if it doesn't appear like magic to the end user,
right,
you haven't simplified it enough.
Definitely.
So most people have no clue what's going on behind the glass on their iPhone. And trust me, it's a very sophisticated set of technologies coming together to deliver that experience.
And you have a lot of experience with
you
that.
would know.
Yeah,
Parts of it. I mean, I know.
Yeah, well,
I'm not the hardware guy.
You
but I've
solved the
definitely-
big problem.
I've messed with some of the payment software for sure.
Wow, that's exciting stuff. Anything else, or we're going to put a wrap on this?
Thank you so much for coming on to the...
Truly a pleasure.
Yeah.
Yeah, thank you so much, Cosmos. Yeah, thank you.
You got
really
it.
appreciate the time. And
Okay.
Great questions, great conversation.
So we had Edward Katzin with us today, and of course Cosmos, and that's another episode of Link to Podcast. Thanks for joining.